welcome everyone. My name is Matthew Sturkey with Stone Mill Log and Timber Homes. Thank you so much for joining us today, for taking the time out of your day during lunch or with whatever you're doing at work to join us to learn more about the construction loan process. We're going to take a deeper dive, but before we do that, I would like to just introduce our company. For those of you, we've got clients that are on this presentation, we've got prospects, we've got some people that may not know much about us, but for those who aren't very familiar with our company, just a quick introduction. We are a family-owned and operated business. We started in 1974. We're second generation. We specialize in the design, fabrication, and construction of log and timber frame homes. We don't do any stick and brick. We don't do in log construction. We don't do round logs or D-logs. We're a dovetailed flat log construction company. And our love and our passion and our specialization is log and timber frame homes exclusively. So if you are interested in building one of those two types of homes, you've come to the right place, and we look forward to the possibility of working with you. We help clients that are looking to build primary residences, second homes, investment properties, estate properties, everything in between. We basically offer standard designs, which you can modify. We offer the ability to do custom. We have our own design team. We do all the structural engineering. We fabricate everything in-house. We do all of our own construction of the log and timber components, and then we partner with you and your other subs or you and your general contractor, depending on what area of the country that you're building in, to get that unique log and timber frame structure constructed. We also partner with a lot of other vendors within this industry. One specifically is within the lending institution and trying to help our prospective clients get started with financing and help them navigate through the construction loan process. So we're going to be introducing a special guest here shortly that we work with, that we refer to a lot of our clients, who works with our clients on getting that construction loan process in place. So some of the goals for today are going to be, one, to kind of take a deeper dive into the construction loan process to help you better understand and navigate through that. There's a lot of talk about lending and interest rates, and we just got through, going through a lot of press, so to speak, with regards to rates and mortgage rates, et cetera. So we're going to take a deeper dive into that. We're also going to really talk about helping you move forward, because the construction loan process can be, tricky at times, and you really need a relationship. You need a partner who has a lot of experience, somebody who understands how to be creative, understands your situation specifically, and can help you navigate through that, because there's a lot of myths out there about construction loans and interest rates. And so we just want to help educate our clients. This is an educational presentation. This is not a sales event where we're looking to sign people up at the end. We want to educate our clients on how to get through this lending process. And so we bring in today a special guest from ORNL Federal Credit Union. His name is Ronnie Barnes. His partner, so to speak, is Tracy Liverman, and they are with ORNL FCU, and they're more local. So if you are looking to build in this East Tennessee region, they can certainly help you. However, if you're not, they're going to be able to give you special important tips about things to look for in your construction loan process. And then we can refer you to other lending institutions around the country that help our clients navigate through that construction loan process. So without further ado, I wanted to introduce Ronnie Barnes with ORNL FCU. He is going to be talking a little bit about the construction loan process. Welcome, Ronnie.
Thank you, Matthew. I appreciate you guys having me.
Yeah. So before we get into the construction financing process, tell us a little bit about yourself and about your experience in construction lending.
Yeah, so I've been, first off, ORNL, a lot of people ask what ORNL is. So it's our SEG group is Oak Ridge National Laboratories. We're out of Oak Ridge. We're a East Tennessee credit union. We have about 200,000 members. So we're a large credit union in the state. We do construction lending. We do everything as far as, financing, new accounts, all that stuff. So we kind of cover the whole spectrum of banking. But mainly want to tell you about, today, just kind of discuss the construction lending side of that. So I've been with a credit union for going on 17 years. So I was a branch manager before. So I kind of have some experience as far as helping people kind of navigate through their finances in general. So I think that helps me a lot whenever we go to trying to find solutions for people to get them, financing that they need. So.
Right. Hey, Ronnie, talk specifically about your experience with financing log and timber frame homes and some of the kind of specialization of that.
Yeah, so I mean, in the area that I'm in, so I'm out of, I cover Sevierville, Pigeon Forge, Gatlinburg. I'm sure I know a lot of you guys are from out of state. So Dollywood, I mean, this is the area where there's lots of investment properties, lots of second homes. We have a lot of people moving to the area from all over the country. So I do a lot of financing with cabins. It's pretty common in the area that I cover. So yeah, it's a big segment of what I do.
Yeah, so for somebody that's on the presentation that's maybe in Ohio or California or planning to build in another state outside your territory, are there going to be other people that have similar experience to you that do log and timber frame financing for prospective clients looking to build this type of construction?
Yes, absolutely. So, and my goal here is not just to tell you what ORNL Credit Union can do. It's kind of to tell you the whole spectrum of what's out there that you can, with wherever you're at, there's probably lenders in your area that can help you with the things similar to what we can do. So it's more of just information across the board, not just what the credit union has to offer, because I can do lending in Tennessee, most of East Tennessee, but when it comes to construction lending outside of Tennessee, that's not something that we do.
Sure.
So yeah, there's going to be financial institutions, that are in your area, credit unions, and you may want to check out credit unions that can do things similar to what we can do here.
Yeah, and as I said earlier, we also have lending partners around the country that we can refer people to who are building in another state than Tennessee. So certainly we are happy to share those with our prospects during the kind of design build process. So Ronnie, with your 17 years of experience, let's jump right into it and start talking about some of the options. What are options for our prospective clients out there that are looking to build a forever home, or they're looking for that second home, that legacy home, or they're looking for an investment property? Talk to us a little bit about what options people have when it comes to construction financing.
Yeah, so speaking of speaking generally, so the credit union we do primary residence, we do second homes. We don't do investment builds. Just something we've not jumped into, but there are options out there. And I think, what I hear a lot of times is people will think that they will have to have, a large amount of money down, or that they are limited on what they can do. There's options out there for, as far as loan to value, like the credit union, we'll go up to 95% loan to value with a credit score of 740.
Yeah. So 95%. I had a client who maybe on this presentation asked me, or basically say that they had heard online somewhere that you had to have, I think they were saying you had to have
20%. That's usually what
20% or even 30%. I think it was more than 20.
Yes, and there's some lenders out there that probably do have those requirements. That's why it's important to really check around to see what your options are, because each lender has different requirements. Now we will do, and we'll do even with a lower credit score. Say you've got a 710, we'll do 90% financing. So we're still higher than the 80% that a lot of people think that they have to be at 20% down. We'll do 80% financing with somebody that has a 640 credit score. So that goes into another area where people think, I have to have perfect credit to qualify for a construction loan. That's not necessarily the case.
Yeah, I mean, like for you guys, and I know you don't speak for the other lenders out there, but like, what's your minimum requirement for credit score?
Yeah, so 640 as a minimum requirement for us to do a construction loan, and we go up to if you go up to a 660 score, actually you'll go up to a 660. We'll do, like I said, it'll be 80% at a 640. And then
Right.
if you go up to the 660 range, you're up to 90% on the value. So,
Gotcha.
yeah, I mean, that's a big misconception, that we
yeah.
see
So as
out
that
there.
credit score goes up, the amount that you have to put down goes down, correct?
Yes. And I do want to add real quickly, we'll talk about this in a moment, but I want this to be top of mind. When you own your land, that's going to count towards that down payment. We'll get more into that, but just keep that in mind. If you own land, that's as good as cash down. So that's when we talk loan to value. A lot of times if someone owns their land, they may not have to bring any money at all to closing. That would be your down payment, that would be your closing costs. So keep that in mind as well. So you may be in a position where you don't have to bring any money at all to a closing on a construction.
Okay. So we'll get into that. Ronnie, talk to us if I'm a prospective client and I currently am in my existing home and I want to build something in another state to relocate and to retire to, but I want to stay in my existing home until that house is built. Talk to us about that construction loan, new construction coupled with, existing home ownership.
Yeah, and again, another misconception. I have a lot of people that think that they have to sell their current home to build, and they're thinking, well, where am I going to stay? Am I going to, what am I going to rent? I can't find a place to rent. That's not necessarily the case. What we look at is if you own a home, if you have a mortgage now, as long as you can cover your mortgage payment and the anticipated mortgage payment on the build, then you can carry both mortgages. You can, a lot of times what people will do with us is they'll build and then they'll turn around and sell their home. And so let me rewind a little bit. So when we do a construction loan, we give you a 12-month term to build.
Okay.
If you build your home, say in 7 or 8, say 9 months, say the house is finished in 9 months, we will allow you to stay on a 12-month term on construction for the 12 months. So what we have a lot of people do is they'll build their home, they'll move into the new home, they'll put their existing home on the market, sell it, and then they'll bring us a lump sum of money because they're still on that interest only payment for that full 12 months. And then they'll apply it to the principal. And then at that point, Tracy we'll recalculate the payment. Tracy will convert that over at that time.
Okay.
So don't think that if I have a mortgage now, as long as your income's solid and you can cover both mortgage payments, that's never an issue.
Right. Yeah, and certainly some of our clients do want to go ahead and sell their existing home and take that equity out of their home and put it into the new construction. We've got clients that will live in fifth wheels and RVs out at the site, so we get a kind of a mixed bag of everything. But that's good to know. Talk to us a little bit about cash reserve. What your requirements are. What's typical, for a lender? And I know you don't speak for all lenders, but talk to us a little bit about that.
So we have cash reserves on here, but cash reserves doesn't have to be just cash. So I want to say that first. So when you're looking at reserves, the main thing for reserves is whenever we do a mortgage for someone or construction loan for someone, once we close on that construction loan, we can't go back and add money to it. That's why we always want to make sure that we include enough funds in the budget to cover all expenses or any expenses that could come up. So we require that you have, credit union requires that you have 10% reserves. Now that, like I said, that doesn't have to be cash sitting in a bank account. It can be investments, 401k,
Okay.
retirement funds, anything that you have access to, just in case you were to go over budget and you had to tap into those funds. So it has to be funds that you do have access to.
Okay.
So keep that in mind. And of course, our goal is to never have you have to touch those funds. We don't want you to have to do that. Now, most lenders and many lenders will require a 20% reserve. So that's, again, that's where you want to check with different lenders to make sure, to see what the reserve requirement is. And again, we don't touch that money. A lot of people think you're going to hold that money, put it in an account. No, we want to make sure on the closing that you have that so that we can come back if needed. Another point I wanted to, something else I wanted to point out also is if you're, well, I lost my train of thought. Sorry.
It's all right. I do it every day.
Yeah.
So cash reserve, lender to lender, you're saying you guys are 10, some lenders are 20. Best to just check with the lending institution that you're talking to about what they require. But
yes.
Is 10 to 20% kind of your average? Is that typical for most lenders?
That is typical for most lenders. And like I said, it just depends on the lender, what they require. Now, you know, a lot of times these lenders will make changes. And I've had people that's been in the construction process. And you want to make sure you're with a trusted lender so they're not going to make changes during your construction process and say, well, you need to have 20% reserves now. I've remembered what I was going to say. On construction loans, there's some lenders that will do a one-time close. It's just a straight construction to perm loan, which is what the credit union does. We do have lenders, there are lenders in the market that require 2 closings.
Okay.
They'll do a construction loan for you. You'll close on it, then you'll have to turn around and pretty much do a refinance or a new mortgage for the permanent financing. So that's something you want to try to avoid. Me and Tracy were talking last night. You have members, I have a lot of members that are building a home to move here. They're retiring. So if you're building a home and you're going to plan to retire after you start construction, then you're going to have to qualify for a new mortgage at the end. And who knows what your income is going to be at that time. So it can affect you from qualifying if you have to come back later and do another mortgage. So that's why construction to perm, you know, like we do is much more beneficial. Plus, there's only one set of closing costs. You know, those lenders are going to hit you with 2 closing costs. They're going to, you know, one for this closing and one for that closing. So when you're shopping lenders, make sure that you deal with a company that has a straight C2P construction to perm product.
That's really, the one-time close is really important, and it's a really good feature and option. A lot of the lending partners that we work with have that one-time close, and that is a really valuable option. So, Ronnie, talk to us about options that are out there with loan types. I mean, you know, let's get creative in a market that is seeing high interest rates.
Right.
What options, talk to us about your traditional options and what other options are out there for somebody who is wanting to see a lower rate and kind of bet that in 5 years or so, interest rates are going to ease back down. I mean, we've already seen the Fed this month come out and say, hey, we're not going to tick them up. And that, you see what that did to the market, to the stock market. And so talk to us about the different loan types that are out there for, you know, site-built financing.
Sure. So, of course, there's conventional financing rates out there in 30-year fixed, 20-year, 15-year fixed rate terms. And, you know, some people, that's what they want, and that's fine. Yeah. Those rates are a little bit higher now. Of course, you know, we're hoping rates, like Matthew said, we're hoping rates start steady and going back down. But we don't know. I mean, nobody really knows, you know. So, of course, if you're looking at a 30-year fixed, we've got those options. But we have a product, and I'm sure, like I said, other lenders will have similar products. It kind of sets us apart, and probably about 98% of what I walk on rates right now We've got a program that is it's a 30-year amortization, but it's a Flex 5 product. And what that means is the interest rate on that product is fixed for 5 years. It's really during the construction phase that you have that rate, and then it converts to a 5-year ARM. So really the rate's fixed for 6 years if you look at it that way. That rate is typically up to 1% lower than the conventional 30-year fixed type rate.
Right.
So it's a very popular product. And the people that go with that product, they typically have plans to come back to refinance once rates start going back down. So that, that's kind of the mindset. I hear different things when, when you have a new president. I mean, we don't know what's going to happen with the rates, so that is an option that we offer that is very popular. And again, people plan to come back. They'll keep an eye on the rates. With my members, I keep an eye on the rates for them. Rates start going down, I reach out and say, hey, rates are lowering. You might want to consider a refinance. So the credit union, we have an option to where when someone does come back to refinance with us, we've got a program where we can refinance, not have to charge them the full closing costs again. It's a good program that we offer that helps them when they do come back. There's minimal closing costs. A lot of times we don't even have to do any appraisal. So there's options out there, and you want to, like I said, check with your lender to see.
So does that closing cost that you would normally have on a refi, is that get rolled back into the mortgage?
Yes, absolutely.
Okay.
So you're not having to.
So you're just lowering the rate. Yeah, got it.
Yeah, we do it as a complete refinance, pay off the existing loan, but it's, again, the closing costs are reduced. So that's a great option. I mean, and again, everyone's different, so you've got to consider what's best for you. Those ARM loans are great for people that plan on paying the mortgage off quickly. Also, I do have people that plan to retire and they plan to pay their mortgage off quickly. So that's a great option for that as well. And again, that's something that some lenders do that we offer. Just, like I said, whenever you're talking to lenders, these are some ideas that you want to kind of bring up. We offer a one-time rate or one-time principal reduction. So say you own a home and you build, you build you a new house and you have an existing home and you don't want to sell it right now. You can, at any time, we offer you an option for you to sell it. When you sell that house, you can bring us a lump sum of money. We'll apply it to the principal of your loan and recalculate the payment for you. So that's a great option for members as well that we offer. That, again, when you're shopping lenders, these are some things you may want to check on and see if that's something that they can offer as well.
Yeah. So if I'm building a new home, I've got an existing home, I want to put it on a rental market, generate some rental income, and see what kind of return on investment I get over a 3-year period. And then after 3 years, I sell that, take all the equity I've got out of the house, and then roll it into the new home. You apply that towards what you call that principal reduction.
Yeah. So you wouldn't necessarily have to refinance the loan. You could just bring us the funds and we'll do a principal reduction for you. So it's a pretty popular option that we offer. So
is that widely offered within the lending industry, or is that specific to you guys? I mean, did you guys come up with that, or is that pretty well known within?
Yeah, I've seen some other lenders that do principal reductions out there, but yeah, I don't think it's something that not all lenders offer. So
yeah, I think one of the things that I want to mention, just from my experience with you, Ronnie, is that there's not just a one size fits all. I think a lot of people just assume that every financial option is going to be the same across the board. And it varies so much from lender to lender, from client to client. And also having somebody like yourself that's got a lot of experience, that's been in the lending institution for a long time and can get creative. And I'm not talking about getting creative within, like, hey, you shouldn't get finance. I'm talking about just getting creative with different options like ARMs versus, fixed rate, options. I mean, there's just a lot of things out there. And I think the mindset sometimes is that, oh, I got to have a 30-year or I got to have a 20-year. No, there's all kinds of things that are out there right now that are available to help lower the rate with the option to refi or do some kind of principal reduction where it's not just a one size fits all.
Absolutely. And, you know, everyone's financial situation is different. And when I'm helping someone, I mean, my goal is to come in and try to help them overall with their finances. So, I mean, there's times I have to, you know, I have them refinance vehicles, whatever I can do to get their cash flow better. And sometimes we have to do those things and be creative to help them qualify for a construction loan for a purchase for that matter. So you really want to work with someone that's going to go above and beyond to try to help you and not just, you know, look at it and say, well, I can't help you, or they don't have time to help you, or they're not willing to work with you through the process. I have people that I work with for 2 years or more to, you know, just to get them where they need to be to purchase or to build. So it's important to pick the right lender that has the products and a lender that really cares and wants to be there to help you.
So I'm going to go a little bit off script.
Mhm.
Forgive me, Dawn. Don't get nervous, because I want, you know, I want our prospects and our clients to know, you know, when somebody comes to talk to you, you know, they're not going straight to a construction loan closing. I would think that wouldn't the first step be to kind of get pre-qualified and talk to you about their financial situation? Not at that point in time, it's not like they need a full set of drawings and a full-blown turnkey estimate to go to a closing. You're just trying to get a snapshot, right, of what their financial situation is, what their debt to income rate is, trying to give them a snapshot of kind of what their overall budget goal would look like, so that when they come back to us, we kind of have an idea of what we're working with and what design might fit that budget goal, and what their, you know, what their budget goals look like from a standpoint of finishes and square footage. So is that what you would recommend to somebody kind of as a first step? Like what do people need to come to you with in just a pre-qualification?
Yeah, absolutely. That's going to be the first step. And it's important because, you know, people sometimes have misconceptions about what they can afford. You know, we don't want to send someone through a whole process and then come back and say, well, this is payments way more than I expected it to be or anticipated. So
Right.
I really would like to sit down with folks and see where they're at comfortable, you know, as far as payments goes and what they're, you know, where they want to be. Of course, you know, at that point, I get you pre-qualified up to a certain dollar amount is the way we look at it, you know. So if you know, some people say, well, I don't want to spend over X dollar amount, or I want my payment to be no more than X dollar amount. We can kind of, I can give you a kind of payment estimates of what you're looking at, financing, and even, you know, we're looking at that end product of how much is going to be left, you know, at the end of how much you're going to be paying and how much you're going to owe. So absolutely, first step is to talk to the lender to get pre-qualified and have an idea of what you can afford and what you're comfortable with before you know, go in and, you know, go through the process of getting your house plans and then contract and all that. So very important to start with that process of pre-qualification.
Gotcha. So I'm a prospect. I come to you, you give me kind of a particular budget goal, and then I go back to my log and timber frame company and start the design build process, get a plan developed, a square footage developed, and then when we are getting ready to go to a construction loan closing, what information or what do you need from me at that point to move forward into a construction loan closing? You need a full set of prints, or do you need just something kind of preliminary?
Yeah, so to file the processing, I have to have a signed contract with the builder, a budget, okay, and then your house plans. And it is good to have the final house plans because we order an appraisal on the front end, and the appraiser is going to go off of those house plans that you provide. So that is important. Of course, the appraiser is going to give us a value of what they anticipate the house to be worth sitting on your land. So that's the number that we work off of, and that's where land equity comes in, which we'll get into in just a minute. That's the figure we work off of as far as loan to value goes. So that's how that process works.
Gotcha. So
Typically, sorry, Matthew, from that point, once I submit a file to processing, we can typically close in 30 days. And once you close, you're closed. That's whenever the build can begin. So that's time from the time that you have your house plans and contract. It's pretty about 30 days turnaround time.
all right, so I come to you, with the intent. I've got a full set of plans in hand. I've got my good faith turnkey estimate, which is my budget. I've got my contract with my builder. I bring that to you. What happens at that point? Talk a little bit about the next steps and that one-time close option, because I think this is a really great product that you and other lending institutions that we work with and partner with do offer.
Yeah, at that time, I mean, once we have your house plans and everything, that's when we can lock a rate. I have to have a contract to lock your interest rate in. And again, at that point, I've gathered all of your personal information, W-2s, pay stubs, if you're self-employed, tax returns. That's when I take all of that information and basically submit it to processing. Underwriters review the file. We wait on the appraisal and title work to come back. And then at that point, that's when you close. Once you close, that's when Tracy kind of takes over the file. She handles the backside of the draws. She'll send out appraisers to make sure everything's on track, or she'll go out to make sure everything's on track with these builds. And she helps you pretty much to completion till the house is finished. And like I said, after it leaves me on the finance side, she kind of takes over that at that point. So
okay, so when we're doing the construction loan, we're basically set up in a series of draw schedules, correct?
Yes. Mm-hmm.
Okay, and then when we finish construction, talk about that construction to kind of perm process, what that looks like.
Yeah, I mean, once the house is finished, we file a notice of completion. If there's any modifications, there's one form that she has you fill out and sign. But at that point, you're done. You're not having to come back in, re-qualify for a loan, anything like that. Once the house is finished, and she'll typically reach out, and at that point, if you have money that you want to put down, I have a lot of people that will save money throughout the year while they're building, or they'll have that money set aside for reserves. And they'll bring that in at the end and say, hey, I'm going to apply this to the principal before we convert. And that's when Tracy, they'll apply it to principal. She'll recalculate the payment based off what's owed at the end. And you're set. Your house is finished. You're not having to do another closing or anything like that. So
what happens? So you got 12 months, right?
Mm-hmm.
And that's pretty industry standard?
We do. So if the house is over $1 million, we'll do an 18-month term. Just gives more time. So yeah, I mean, that is pretty industry standard, but we do give you more time depending on, build over $1 million. So.
Okay. So let's say the house is not over $1 million. We're building in a pretty rural area. Mm-hmm. Build time frame goes from 12 to 14 months. Yeah. What happens in that 2-month period? Is there an extension? You pay for an extension? Is there a penalty? What does that look like?
Tracy, are you on?
She's not on. Just in general terms, because I know it varies with each lender.
Yeah, it does. So we don't. We'll work with you. Some lenders are more strict when it comes to that, but we will work with you. I mean, we're not going to charge you a penalty. I think there's a form that she fills out. But it's not the end of the world. It happens, and we work with you. And that's another thing about when you choose your lender. Credit unions, I mean, we're there to help people, right? I can't tell you that if you're financing with a big bank, Bank of America, that they're going to be like as forgiving as we are when it comes to those types of things. So again, it comes back to your lender that you're working with.
I think that's really important, and to know and to ask these questions on the front end, just so you know, because let's face it, everybody would love to say, hey, I'm building this house and it's going to be built within 9 months. And we all know what's happened in the last few years with supply chains and some of those things. and projects creep into a 13, 14-month time frame. And what happens then? You just want to know what what you're going to be dealing with if that does happen.
Right. Yeah. And every lender is different. And it's another question that you would want to ask your specific, whoever you choose to work with. So for me, I've had some go over. It's never been an issue. We work with you. We're not going to penalize you. We work with you till a house is finished, and then we do the conversion. So.
Okay. So talk to us about, if you haven't already, or if you want to add anything else to it, closing cost requirements, rate lock, what happens, again, if I lock in a rate during the closing of the construction loan, we go 14 months and rates change, right? Does my rate change, or if I locked in that rate from construction to perm?
Yeah, so we do lock a rate in the beginning, which, when rates were very low, that was great. People loved it because we're locking a rate when we get a contract. That is the rate that you will have. That's the rate that they'll convert at. The only way the rate would change would be to do a refinance. If we do the refinance, the express refi discussed earlier, that we would reprice it based off of current market rates. So
Gotcha. So if I lock in at construction, we finish the construction, we go to perm, and those rates have gone up 0.5% or 1%, I'm still paying the same rate that I locked in at construction.
Right, absolutely. So if you locked in, just for example, today our rate on that 5-year ARM is at 5.93. So we can lock you at 5.93. When the house is finished, we would go into that 5-year ARM at 5.93. And those, when you hear a variable rate too, something else that you want to ask about, there are caps on those products. So it can only go up 2% per year, and it can't go up more than 5% above what it starts out at. So of course, 10% is going to be high, 11% is going to be high for a mortgage, but I tell people that anyway, just because they think in their head, my mortgage is going to go to 30% and I can't pay the payment. So that's not going to happen. Of course, the credit union, we have interest in your loan as well. We'll work with you. We don't want to see you foreclose. I mean, the credit union is there to help. So,
right. It's not to be punitive. You want to see people move forward with the building project and get into a permanent loan.
Absolutely. Yes. So one other thing I did want to go into a little bit of more detail about land. Because there are some things out there that, so land is great to use as collateral. If you own that land, that's as good as a cash down payment. Another thing you will want to ask your lender is, sometimes lenders will only use the value of what you paid for the land instead of what it's actually worth. Some lenders will say, well, you have to own the land for 12 months. I had this recently. I had a couple that bought land from a family member for like $30,000, and it was worth like $100,000. Well, their lender was saying, well, you've not owned it. You're only getting $30,000 worth of credit. We don't do that. Like, whatever the land value is what the land value is. So,
hey, real quick, when you say land value, are you going based on market value or tax value?
Not tax value. Tax value is always much less. Yeah, it's going to be the actual value of what the appraiser values it at, and
appraised value.
Comps. Yes. So if you're building in a neighborhood where these lots are selling and the value is really good, you'll get that. That's the value that we'll be working off of. And so that is something to keep in mind as well whenever you're looking for financing. Is make sure that your lender is going to give you full value of what the appraised value is of your land.
Okay.
And again, another thing real quickly, your land doesn't have to be paid off. I have that all the time. I want to build, but I still owe money on my land. No, we will roll whatever balance you owe on that land into the construction loan. It'll be the first draw. We pay that lender off. So that loan is gone. So that's another thing. People think, well, I have a land loan and I'll have a construction loan. No, we'll pay that land loan off. It'll be gone and it'll be rolled into your construction loan. So that's that's a common misconception that I hear a lot of times. People are thinking, well, I can't build for 5 years because I'm going to have to wait. I'm going to pay my land off first. It's not always necessary to do that.
So let's take a hypothetical. Let's say someone bought a piece of property 2 years ago for $100,000. They've got $50,000 in equity into that property. And 2 years ago, if you're in this market, that property that was $100,000 is probably now worth $200,000, right?
Yeah.
So now you're basically saying that that land, the value appraisal is on a $200,000 number, hypothetically. And I'm taking that $50,000 that I've already put into it, and that is basically equity as cash down going into loan. And then you take and basically put the land and the construction and the home into one mortgage.
Yes, yes. We'll pay off the land, add it to, say the cost to build's $500,000, then you're going to have a $550,000 mortgage if you owe $50,000, but you're going to but the house is going to be worth $750,000, so you're going to have $200,000 worth of equity still, because we're going to be basing everything off of the current value.
Okay.
And we see that, I mean, in this area, that is common. I mean, these lake lots, I mean, Dawn she knows this area, this market, these lake lots, I mean, it's crazy. You go Douglas and anywhere, well, she's familiar. I mean, the value of land is always going up here in East Tennessee.
So talk to us a little bit about that last one, which is, if we've got a client that's looking for a piece of property, say, they're looking for 50 to 100 acres.
Yes.
And they're wanting to build a home on it, and they find the property and they want to build simultaneously. Talk a little bit about how that works.
Yeah, so it's a possibility to just have a one-time closing if you're looking to build and you're wanting to buy land at the same time. So an option would be for people to buy their land. If they finance it, they're going to pay closing costs on that land when they finance it, right? So if they can come to us and do it as a one transaction, the thing with that is you kind of have to have your ducks in a row as far as your building goes.
Right.
You'd want to have kind of your house plans picked out, kind of have a contract and those items taken care of. And then that's when I would send them to Dawn and say, Dawn, these people need to find some land that they can build this house on. And she would go out, and look for land. And then you would basically have a contract with the builder, with Stone Mill. You have a contract, then you would have a contract with the seller of the land. And that closing,
I see that, that's the one thing I see is maybe a little tricky, because the seller is going to have to allow the buyer to have plenty of due diligence period of time to not only find the property, but then get a design and a budget together all in that short period of time before it goes to closing. So you're doing that all simultaneously, right? Because one of the things we tend to recommend to our clients is, hey, we need to design this home to the property to make sure the design best suits the property that you've actually purchased. And if all that's being done together, that process can take some time, and a lot of sellers won't want to wait that whole period of time in order to close on that transaction.
Yeah, that's absolutely true. It can be tricky because it can take, the seller of the land has to be very flexible. So that's typically what I recommend. If my member has the money to buy the land with cash to pay for it, I have them go out and purchase the land with cash, because I'm going to turn around and use that equity in that land anyway toward their construction.
Right.
So if they have the funds to buy the land with cash, that's what I always recommend. They buy it and we turn around and use it as collateral, and that, they would want to communicate with you guys to make sure that, the house plan that they are choosing, it is something that you can build on that land. So, I mean, that's where it comes into where you want to work with the builder.
Yeah, or I could see it working if a client came to us and we did design and budgeting, and then what we were looking for in the property was a level lot in a development that could pretty much suit just about any design and we've already got that design and we've got the budget in mind, then you would already have your ducks in a row at that point. And then you're looking for a piece of land to kind of suit what design you want and the budget goal that you have, which is a little backwards, but it could work in a development where you're just looking at level lots, right? Where there's not any topography, the site conditions are pretty basic, it's open, you don't have a whole lot of slope and topography to deal with that can vary those construction costs.
Yeah, and I absolutely like going that route better. I would rather them talk to you and then get with then find the land, and then the cash for the land. You don't have to own, I'll add, you don't have to own the land for a certain amount of time for me to turn around and use that as collateral for the construction. So
okay,
if you pay $100,000 for that land cash, then you got $100,000 of equity going into the build.
Awesome. Well, what other, I guess, tips or what other information, as we get to closing, what other information do you think would be beneficial for our prospects and our clients, with regards to construction financing?
Yeah, again, I think it's just important to know what your options are, know that there's different lenders out there that can do different things, and to check around and see what's out there that can be offered. And don't assume that your situation is one that can't be worked with. I have a lot of people that come in think that their credit's awful, and I'll pull their credit and they've got an 800 score. I mean, it's just, you really have to, don't assume that, it's something that you can't do or that there's not ways to work around, and just, feel free to ask those questions to your lender. If you have questions on how the financing works and what options you've got, it's just important to have that open line of communication with your lender to understand what you need to do. And if the time's not now, it's best, now's a good time to prepare to get to that point when you're ready to pull the trigger and go through with the financing and the build.
Well, I certainly appreciate you and Tracy. Sorry if Tracy's having some difficulty, some technical difficulty, but really appreciate your partnership, your experience. I certainly want to close with a few points that there is no one size fits all. It is really important to start talking to your lender early and often to find out what options are available and what the best lending type or loan type is right for each particular client. Each client's financial situation is different. The amount of equity or cash that they're bringing to the table is different. Their credit scores are different. There's a lot of options that are out there. What I get kind of frustrated with sometimes is when you just read stuff on the internet, right? It can scare you into thinking that, I've got to put 35% down on everything without actually consulting with a lending institution that offers 90 to 95%, financing, right? And so we got to be careful about just believing everything that we read, and we've got to be vigilant about going out and talking to these lending institutions and lending partners that have this experience and can look at each individual prospect situation differently and say, hey, have you thought about this flex rate or this 5-year ARM? What's your individual financial situation look like, and kind of digging deep into that to find out what the best, fit is for that individual client. So I think that's what I would, really close with is do your homework, talk to your lender. If you don't have a lending partner, let us know. We'll provide you with a list of lenders that specialize in log home financing. If Ronnie or his company can't help you because you're building in Kentucky or Ohio or in another state that he doesn't service, we've got other lending partners that we can refer you to. If you're building in this area in his territory, so to speak, then we'll share his contact information with you so that you can reach out to him and kind of start navigating through that financial process. So if you've watched any of our videos and been a part of any of our presentations, we're always going to stress to plan ahead and do your due diligence and be vigilant in your planning, because there isn't a one size fits all, and there are so many different options out there. And if you're trying to find the right fit for you, you got to plan ahead. So Ronnie, thanks for joining us. This kind of closes our construction loan presentation. And now we'll kind of turn it over to Dawn and a little final Q&A. If there are any questions for Ronnie, this is the best time to do that. If you have any questions about stone mill or construction, certainly we'll try to hold some of those till the end so that we can tackle all the financing questions first, as that is what this presentation was really about. So Dawn, I'll let you take it over.
Yes, and thank you, Ronnie, for all the information. We had a ton of questions, so I'm going to try to get through these as quickly as I can.
Sure.
So one question we have is, if the rates go down before you convert from your construction to perm, do you get the lower rate?
No, so what you lock on the front end, that is the rate that we carry through the process. To get a lower rate, you would have to do a refinance for the rate to go down. And again, if we come back later on and rates start decreasing, that's whenever we could look at the option of doing the express refi, where we go ahead and refinance the mortgage and go with a lower interest rate.
Okay.
That's a great question, and I love the optimism.
Yes. I know, right?
Yeah.
So we also had a question is, do you do any kind of VA loans with construction loans? Is that something that the credit union offers?
It's not something the credit union offers, but it is a product that's in the market. So
Okay.
Yes, there are options out there for VA construction. There's just specific lenders that will do that, but yes, that is an option that's out there in the market.
Yeah, I would stress to talk to your specific lender or your prospective lending institution about their products available for VA, because not everybody does it.
Exactly. Okay, this person asked, they own 4 acres, and that, let's say the land is unperkable and there's some other major roadblock. What happens with the contract and the construction loan, let's say if they can't build?
I mean, if we can't build, then we can't close. I mean, that's on our end. There's not anything that, I mean, we're not penalizing anyone or anything like that, if that's what they're meaning. But I mean, if it come down to a situation where the land wasn't perkable, or it was landlocked for some reason, we've seen that, then I mean, we just can't close the mortgage is all. It's just, it's unfortunate.
And is there any
So let me,
I guess, prior to closing the construction loan, what would the lender require to be done, I guess, to, make sure that it's buildable?
Well, I mean, they want to definitely make sure the land's perkable. That's not something that we would handle on our end. And Matthew may be able to speak more to that.
Yeah, I was going to touch on that. I mean, if you already own the land and a perk test hasn't been done, so my advice would be, before if you don't own property, make sure in that due diligence period of purchasing the land that you get a perk test done. So that's for all the non-landowners that are looking to buy land. Make sure that you get a perk test done, and the property will perk to build the number of bedrooms that you want to build. Not if you want to build a 4-bedroom and it only perks for 2, that's a problem. So make sure that it not only perks, but it perks for the number of bedrooms that you want to build. If you already own the property, I've been doing this for 25 years now. I've seen one situation in 25 years out of hundreds and hundreds of builds where a property didn't perk. That's not to say that it'll perk for the number of bedrooms that you want to build, but I've seen one situation. So if you already own the property, you might want to do a perk test in different spots within the acreage. So yes, if you want to build in a specific location and that specific location doesn't perk well because you're sitting on bedrock, you might want to find a different building spot. Now, that's an issue if you're only dealing with an acre or two. But if you're dealing with 10 acres or 20 acres or a larger tract of land,
Can I call you back?
then certainly you've got other options for building site locations to get a perk test done. And just because you can't get a perk test in one spot on a 10-acre tract doesn't mean you couldn't get a suitable perk test, soil test done on a different spot. For example, I was helping a client find a piece of property. We found 6 acres, but it was a descending lot, and we were trying to build the house right up by the road, and it was an asymmetrical lot. So we had this really specific building site location, and it didn't perk for the number of bedrooms that the client wanted to build. So we ended up passing on the property and going out and looking for a different tract. So for those who haven't bought the land yet, that's one of your due diligence steps in that purchasing process.
All right, Ronnie, how do you address asset-based lending? So qualifications on assets and not income.
I mean, it's based off of income. We don't, there may be lenders out there that will do asset-based lending. That's not something that we do. So it's not really something I could speak to.
Okay. I guess they were referring to like 401ks, assuming IRAs, but IRS, and investment accounts. So those are just some things that you would use as your.
Well, so if I have people that will go set up a distribution to qualify. They'll do a distribution from their 401k, set it up as a monthly distribution for income. And as long as they have enough money in that account to cover a 3-year period, that's what I'm looking for as far as qualification goes. So if they set up a $5,000 a month distribution, and they have, as long as they've got the money in there for 3 years, then they're good. Then that's typically how we would cover that when we do purchase service or construction.
All right. And I had someone ask about paying contractors. So they said, do you pay the contractors directly, or do you get a checking account to pay the contractors yourself? And how do you feel about self-builds? Do you need to have a contractor?
We do require a licensed contractor. The credit union does. The way the credit union does, we have a savings account with the credit union to be a member of the credit union. We do have you'll have a construction line of credit and a construction checking account underneath that account. When the builder requests to draw, Tracy will release that money into the construction checking account, and you write the check to the builder. That kind of keeps you in the loop to know what's going on with the process. Most people really like that. So that's how that would work. We don't just release money to the builder without your consent. So you're in that process.
Yeah, and let me speak real quick, Dawn, to owner builders. If you are wanting to serve as an owner builder and you're wanting to finance, make sure you talk to your lending institution about serving as an owner builder and getting financed. ORNL FCU doesn't allow it. They want a licensed GC. Most of the lending institutions today that we work with do require a licensed GC. Now, there are exceptions sometimes when the owner happens to be a builder or the owner happens to be in the construction industry. I do see lending institutions make exceptions, but it's pretty rare. I mean, if you're a financial advisor and you want to build your own home and you don't have any construction experience, you're typically not going to get a lending institution to give an exemption on serving as an owner builder. That's just what we're seeing today.
Right.
All right, so we've got another question about land. So if you've got a large parcel of property and you're going to build on it, and let's say that you have other heirs to the property, would you have to get those heirs also on the construction loan, or could you build a house on the property and own it with other people?
That would be more of a title question. A title company could probably guide you best in that situation. You could reach out to them. I'm sure they would have to sign something at closing stating that they agree to that build being done, but that's pretty tricky. I don't know. I would be
Yeah.
Very
And can I
cautious about
speak?
that. Yeah.
Yeah, can I speak to that? So we do have a client that that bought about 50 acres, and they basically replatted the property. They took out 5-acre tracts for themselves,
Yeah.
and then they left the other 40 acres, and I'm just spitballing numbers, but they left the other 40 acres in a trust. So the 40 acres was in a trust, and then the 2 5-acre parcels were specifically in their names. And I've seen homeowners do that so that you're basically deeded your own individual tract or parcel of land specific to that acreage. And then the other acreage is just part of an overall trust.
Yes, that would be the best option, is just to have that surveyed off a piece that you're going to build on, so that it's not all tied up in the construction loan, in the loan. So.
All right, I think we have time for one more question. We are already like a minute over. So I want to try to get everybody back from their lunch breaks to work. Okay, how do you view Social Security only income? If they have a really good credit score, can you count that?
I mean, yeah, we can use whatever they draw. I mean, that's the number we work off of. So it is the true number that that they show on their Social Security award letter. So that's the figure we work off of.
Okay. All right. Well, I think that's all the time we have today, guys. I'm going to send out after this. I'm going to take this presentation. I'm going to put it on YouTube and send the link out so you can rewatch it, or people who weren't able to finish out. I know some people logged in and then had to leave. So I'm going to put Ronnie's contact information in that email. If you have additional questions, for Ronnie or for the credit union, reach out to him, and he will be happy to help you answer any questions that you have. Always reach out to us, Mike, Jim, Matthew. You can reach out to me. I will help you the best I can, especially if it's for marketing material or something about Facebook or YouTube. So, which we are all on. I want to just put a little marketing plug real quick. Make sure you go to our YouTube channel. We have over 200 videos on there. We do weekly tips. We've got all of our past lunch and learns on there. So if you watch one and we talk about a handout or presentation, just shoot me an email and I will get that sent over to you. We weren't able to link those onto the YouTube video. So, but anyway, thank you guys. Matthew, I'll turn it back over to you.
Yeah, thanks, Dawn. Ronnie, thanks again. Tell Tracy thank you. Thanks to all of our guests. If your questions did not get answered, I second that. Feel free to reach out to either Jim or Mike, whoever you're working with as your sales consultant. If you have other questions, feel free to reach out to Dawn or myself. We're happy to help. Sorry that we had to cut any questions off short, but if they didn't get answered, just reach out to us directly. We're happy to help. Thanks for your time today. Hopefully this has been super beneficial. I know it has for me. And thanks again, Ronnie, for taking the time out of your day to help our clients and our prospects. So everyone have a great day, and look forward to talking to you further. If you need anything in the meantime, just let us know.